That's why you saw gold. Gold's down again today, about $14 at 2,616. Bitcoin 94,563 down, and Brent crude 73.76. Built plants, of which they were partners on, only 49%. China owned 51%. And now China doesn't need them anymore. They got everything for free. Hey, but we made a lot of money back then. This is serious, and it's only going to get much worse. I mention this because inflation is not going away. It's only going to increase. They've robbed us of our money.
In today's news recap, gold prices to tread water in final trading week of 2024. Low holiday trading volume in the final week of 2024 is expected to keep gold prices contained within their narrow range, according to some market analysts. Markets will be closed mid-week on January. So many analysts remain focused on celebrating the new year rather than monitoring financial markets. Barring any major surprises on the horizon, many analysts predict that gold prices will remain caught in a tug of war between rising bond yields and safe haven demand driven by increasing geopolitical and economic uncertainty. This past week, gold prices were capped at $2,650 an ounce. However, the market was able to withstand significant headwinds as the yield on 10-year Treasury notes rallied to 4.64%, its highest level in 7 months. The precious metal remains range-bound heading into the weekend, even as bond yields stay elevated above 4.6%. Spot gold futures last traded at $2,618.30 an ounce, down 0.57% on the day. Meanwhile, gold prices are down 0.18% for the week. Gold's resilience this week has been underpinned by escalating geopolitical tensions. Investors are closely monitoring conflicts in Eastern Europe and the Middle East, said James Hirchik, market analyst at FX Empire, in a note Friday. Israeli strikes against Houthi targets in Yemen and Russian drone attacks in Ukraine have reinforced gold's appeal as a safe haven asset. This geopolitical backdrop continues to keep gold in play, with traders hedging against the risk of further flare-ups. At the same time, some analysts note that social media comments from President-elect Donald Trump expressing an interest in annexing Canada, the Panama Canal, and Greenland have also heightened geopolitical uncertainty and tensions. Gold's short-term outlook remains bearish, with rising yields and dollar strength acting as stronger drivers than geopolitical risks, he said. However, the current move is unfolding during a historically slow trading week, and thinner volumes may limit follow-through. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you safeguard your online activity and protect yourself from prying eyes. And if you want to learn how to stack and how you can benefit from the gold-silver ratio to make savvy investment decisions, check our guide at goldsilverstacks.com. Enjoy the episode.
Well, on the market front, it wasn't a happy day. The Dow was down over 300 points. Let's see, the S&P fell 1.2%. And NASDAQ fell 1.7%. But, there's still a good year for the markets. But the other news that's important is the yield on the 10-year benchmark Treasury. It rose another 4 points to 4.621%. So that keeps those interest rates high and those mortgage rates high and the dollar high. And that's why you saw gold's down again today, about $14 at 2,616. Bitcoin 94,563 down, and Brent crude 73.76. 73.76. This is so important to see where Brent crude is. because it's showing you how slow the global economy is. And the United States economy is doing much, much better than the rest of the world, as we report in detail week after week in your Trends Journal. China's industrial profits extend decline to a fourth straight month, dropping 7.3%. Profits slumped 10% year on year, October following a 27.1% plunge in September. These are industrial profits. Again, this is the second largest economy in the world. It's very important to see what's going on. And it's global. It's global. And this is despite the stimulus measures that they've been trying to inject into the economy. And again, what killed the Chinese economy is their 3 years of zero COVID policy. And it's destroyed the world economy. And no one talks about it. It was artificially propped up with zero and negative interest rates and trillions of dollars of fake money backed by nothing and printed on nothing. And after the lockdowns, they've lost hundreds of millions of people, lost their lives and livelihoods just in China, billions around the world. And then, by the way, that's why you have a big immigration problem, because people are trying to get out of these countries where there's lack of basic living standards, government corruption, crime, and violence. Again, COVID war made very bad things very much worse. China's EV sales to overtake traditional cars in 2025. Yep. China's sales overtake traditional cars in 2020. Yep. Electric vehicles. And what else? Turkey cuts interest rates for the first time in almost 2 years. Policymakers, shitheads, policymakers, little motherfuckers and fatherfuckers that are in control of the gang, policymakers, cut the key rate to 47.5% from 50%. Annual consumer price inflation dipped to 47%. You see what's going on in the world? This is serious. 47% inflation rate. It dipped. Irish central bank chief says uncertainty higher than in lockdown. Ireland's top central banker said that rate setters are facing more uncertainty now than during the early stages of the coronavirus pandemic.
In the continuation of the episode, Gerald Celente highlights the enduring importance of gold and silver as critical assets in a world facing persistent inflation and economic instability. He emphasizes that inflation is deeply entrenched due to years of unsound monetary policies, and gold and silver offer a reliable hedge against the declining purchasing power of fiat currencies. For Celente, accumulating physical metals is not only prudent but essential for preserving wealth in turbulent times. Celente also discusses China's evolving role in the global economy, focusing on its shift toward advanced technologies like electric vehicles and its strategic accumulation of gold. He notes that while Western companies such as General Motors are losing ground in China, the country's emphasis on resource-backed stability positions it for long-term economic strength. This shift underscores the growing importance of gold in underpinning global financial systems. In the U.S., Celente critiques the unsustainable debt levels and rising inequality, pointing to ballooning consumer debt and soaring interest rates as evidence of systemic fragility. He argues that gold and silver are critical safe havens, offering protection against the financial pressures that continue to mount for the average citizen. Like, subscribe and turn on notifications so you do not miss out our daily recaps. And if you want to stop relying on commentators, get your Stacker's Handbook at goldsilverstacks.com. Let's get back into the episode.
Today, will 2025 be a watershed year for return to office? And they give you the numbers. 1/3 of U.S. employers mandate that employees will be in the office 5 days a week, down 16% from a year ago. Okay. 25% of U.S. companies offer full, flexible arrangements, down from 33. And hybrid arrangements, when companies require a certain number of days in the office, but leave at least one for remote work, are growing in popularity. 43% of U.S. companies have hybrid office policies compared to 29% a year ago. DirecTV has cut costs by shedding around 30% of its physical space. At Yelp, staffers left offices in 2020. The company cut its office space by over 90%. The office building bust is going to bring down the banks. Not a mention of it anywhere. It's going to happen. Yes, people going back to work, but the banks are going to go bust, and you could bank on it. And by the way, Google up Castle Systems with a K. Your office occupancy rate, the 10 largest cities in America, I think it's about 50.4% or 51.4, something like that. So all the businesses that depend on commuters are getting screwed, and not the way you like to be screwed. Stealing our money and calling it taxes as they get all their benefits and they give it to their bureaucrats as well. When they retire, they get pensions and they have an easy life. Yep. Robbing more of our money week after week, day after day, and year after year, from the state level to the federal level, to give it to their buddies and themselves. Credit card debt set to hit record levels. Already, 36% of Americans went into debt this season, one recent report found. From November 1st to December 31st, the consumers spent nearly $1 trillion. Yep. 28% of credit card users have not paid off the gifts they bought from last year. But the rich are getting richer and the billionaires are getting more billions. The billionaires are in charge. They're buying their way in. They're buying their way in and they own it all. Look at the data. The credit card debt, the lousy jobs that people have. But hey, the billionaires, you got $1 billion, you could talk. Otherwise, money talks and bullshit walks. So that's just some of what you got. You know, we talk about inflation, by the way. Someone gave me this old clip from a newspaper, 1939. You see over here, it says, you can't see it all of it, it says Mohegan. And that's where we're broadcasting from, the old Mohegan Market. It was like an old A&P. And this is from 1939. Hudson River sparkling fresh caught shad. Nothing sparkling in the Hudson River. They poison the General Electric, all the crap in the water. Ready? 5 cents a pound. Meringue pies, lemon, pineapple, 15 cents each, or 2 for 29 cents. You want to buy a pound of cream cheese? 19 cents. Grape juice, 2-pint bottles, 29 cents. Electric light bulbs, 2 for 25 cents. There's another place. Yep. Buy a Mother's Day cake, large variety, decorated for Mother's Day, 29 cents each. I mention this because inflation is not going away. It's only going to increase. They've robbed us of our money. What happened? 1939, 1940, 1941. World War II. What they did during World War II, you couldn't raise the prices of anything. World War II ended, They lifted the restrictions, inflation skyrocketed. You listen to these old jazz songs about how bad inflation was back in the late 1940s. And it's just kept going up, going up, going up as they keep robbing our money, creating a fake economy as the rich get richer and everybody else gets poorer. And that's where we're at.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.